Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss a big tech company that may be a fantastic pullback buy, according to Wall Street analysts. This is one of the strongest companies in the world with growing and diverse operations, amazing financials, and a recognizable brand in almost every country all around the world. And the stock that we're going to discuss today that may be a fantastic pullback buy is ticker MSFT, which of course is Microsoft, the second largest company in the world with the current market cap at $1.85 trillion, and they trade for $250 per share. And we can see over the past month, the company is down around 6%, so a slight pullback from this major tech name. And at this current level, they're trading with a forward PE of 31.5 and a dividend yield at 0.91%. And over the longer term, Microsoft has seen some incredible share price performance. For the past 12 months, the company is still up 33%, and over the past 5 years, they're up an incredible 384% overall, so fantastic long-term growth company. And still, even as the second largest name in the market, they're continuing to expand, growing their operations, and are making some major headlines. Just last week, we got news that Microsoft is pushing into the fast-growing grocery tech market within China and Europe. And the company made a new deal with Hanshou, one of the largest grocery store retailers within China and the European market. And they're going to provide a cloud-based software service for the company's store operations on a global scale. And currently, this will get Microsoft into the fast-moving sector within the Chinese market and, of course, some European countries as well. So this is a fantastic strategic partnership to get Microsoft exposure into a fast-growing industry and for this retail brand to team up with one of the strongest cloud-based tech companies. And of course, they're also making other news with a major close to $20 billion acquisition of Nuance, the expansion of their streaming video game network, xCloud, and many more. So in this video, we're going to discuss all the recent headlines surrounding Microsoft and take a look at the company that Wall Street analysts believe is a fantastic pullback buy as the stock has fallen away from their 52-week high. But before we take a look at these headlines in a little bit more detail, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy, and any major market news. So please hit that like button, subscribe for the daily videos, and today we're going to focus on Microsoft, one of the strongest companies in the world. It's a holding I personally believe in, and I actually have it as the second largest position in my personal dividend portfolio, and the current market value is at over $11,000, and I own 44 shares of this tech leader. So I put my money where my mouth is. I like this company personally. I have a lot of capital invested into them, and I hold them for the long term. And if we take a look at Wall Street analysts, they feel the same way. A top trader was quoted as saying, "I love Microsoft. It's one of my favorite long-term growth stocks. It's just so consistent. They have so many different product segments that are continuing to grow. Earnings are consistent quarter over quarter. And personally, I believe that will continue for many years in the future." And these Wall Street analysts have also set a price target on Microsoft for the short term at $270 per share. So a near-term price target indicates their expectation over the next 30 to 90 days, and they pointed out that Microsoft is currently trading near the bottom on the relative strength index, indicating some upward momentum coming very soon, hopefully trending to this $270 level. So analysts like the company right now. I am personally a bull on Microsoft, and I may continue to buy if we see the shares dip anywhere below $240 over the shorter term as well. And now if we take a look, one of the reasons why I love this big tech company is although they're currently worth over $1.85 trillion, their growth is not slowing down. And actually, over the past quarter, they showed their fastest revenue growth since 2018. So their annual revenue expansion has actually picked up to start out 2021. And if we take a look at the numbers from their latest quarter, they generated $1.95 of EPS, beating the expectation set at $1.78. And then their revenue hit $41.7 billion, beating the expectation that was set right around 41. So they came in once again beating analyst expectations and saw the fastest revenue growth since back in 2018. And if we take a look, all of their product categories in the last quarter were in the green, meaning they continued to grow year over year. All their different product categories from Xbox, Windows, search ads, everything saw nice double-digit growth, which is absolutely phenomenal. And of course, the whole future of Microsoft is the Azure cloud platform, which continues to grow exponentially, expanding by 50% over this past quarter as well, making it 2 consecutive quarters of 50% annual expansion, which is absolutely phenomenal. And of course, some recent headlines that really drew my attention back to Microsoft over the past week was the announcement of this deal to push in to the retail grocery sector. That's one of the industries that Microsoft isn't really in right now, and I love that the company is going in that direction on an international scale. So after this pandemic, people more than ever will start to buy groceries online, go pick them up, or get them delivered to their household. So Microsoft, through a strategic partnership with the Chinese tech retailer Hanshou, is going to create a cloud-based software platform designed to help with the store-wide operations in the Chinese market and in the European market as well. So I like that the company's expanding into this industry, and I do believe this new partnership will reap great rewards over the longer term. And if we continue on and take a look at some of the other major headlines that they've been making as of late, the company announced in April 2021 the acquisition of Nuance in a deal worth $19.6 billion to expand in the healthcare market. So Nuance is a speech recognition company focused on the health industry. And this major acquisition by Microsoft is going to grow the company's cloud-based and speech recognition operations with a specific focus on the healthcare industry. So right away, on the last 2 headlines we've gone over, Microsoft is expanding into the Chinese tech retail market as well. Through a $20 billion acquisition, they're now growing their operations in the speech recognition, artificial intelligence, and healthcare industry as well. So this company is doing so much and expanding on so many different levels. And personally, I'm a big fan of this acquisition. I like Nuance as a company, and I believe their tech is really going to work well in the Windows and Microsoft current ecosystem. And of course, if we continue on, Microsoft has even more diversification and strong operations through their acquisition of LinkedIn that they made a few years ago. And currently, that topped $3 billion in ad revenue in the past year, which is actually outpacing Snapchat and Pinterest. So again, Microsoft has exposure to the somewhat business social media space through their ownership of LinkedIn in that platform with $3 billion in ad revenue that actually surpasses the revenue generated from other major social media platforms, including Snapchat and Pinterest. So again, Microsoft owns a platform that is growing and generating more sales and ad revenue than some of the largest social media platforms in North America. Pinterest and Snapchat have grown in popularity due to the pandemic and more individuals staying at home, while LinkedIn still continues to be a beast with growing organic revenue quarter over quarter. So already, 3 different headlines, Microsoft is dominating in 3 different sectors. And that's not even all of it. The last major headline we're going to discuss is that recently, Microsoft has seen some incredible growth from their gaming segment. And in the 3rd quarter, the quarterly sales grew 232% for their gaming revenue, which is absolutely phenomenal. And the company believes there's a lot of growth potential in that gaming space going forward, and they've announced the expansion of their xCloud network, which is a streaming platform with over 100 games and no download required. And this will operate similar to Netflix. We can see a preview of the Xbox xCloud system where it looks like Netflix, all the different games laid out, you can save your favorites, and with a Wi-Fi connection, you can play any of these games and stream them without needing to download any of them on your specific device. And this platform, I think, will grow in popularity over the long term. I think it will give consumers great access to a large variety of games in one simple and easy to use platform. and it's going to operate similar to Netflix on a monthly subscription model with a fee of $15 per month to access the Xbox Game Pass for unlimited play. And I really like this. Netflix has been growing dramatically every single year. They have over 200 million subscribers, and I think this cloud gaming system is going to be the future of the industry. I don't think hardware is going to be around for much longer, and I think everything is going to be cloud-based. So Microsoft expanding into this industry right now through the xCloud system, I think can help them become a leader in the cloud space before their competitors enter in at a larger scale. And I love the $15 per month price tag. I think that's affordable for access to over 100 games with no download required. So of course, it still is early on as a product, but it's growing month over month. They're getting more data, fixing it up, making it a more user-friendly experience. And over time, I do think the xCloud system can become a very popular niche in the gaming sector. So right away, that's a fourth different industry they're operating in and having success in, and we can see that from their financial numbers. So before we continue on and take a look at the company's financial statements and actually break down the numbers, I hope you get the point that I'm trying to put across. I like the company, I'm a bull on Microsoft, and I think as a whole, this is a tech name that's going to be operational for a long period of time. They've grown very well over the past decade. They are the second largest company in terms of market cap in the world. And right now, I think Microsoft is expanding in so many different ways. The company's leadership is phenomenal. I'm a big fan of their CEO. And I think as a whole, their expansion into so many different industries will work well over the long term. And that's why I am personally a bull on the company. That's my own personal opinion. You have to do your own research. Nothing we've gone over today is financial advice. I just want to give you a quick demonstration of why I like the company so much. Global operations, diversification into so many different sectors, market-leading products, high-margin products, continuous revenue generation through subscription-based models, so many positives surrounding this company that I love them, and that's why I hold them as the second largest position in my portfolio. So that's a little quick overview of Microsoft and all of their recent headlines, and I completely agree with these analysts that if we see a pullback, this is definitely a big tech company worth adding or contributing for your portfolio. And now if we take a look at the company's actual financial numbers, they are a dividend growth name with a current yield of 0.91%. Their payout ratio is extremely tiny, only making up around 29% of their total net income, and they grow that annual dividend payment, averaging 9 to 10% per year for the past 5 years. And right now, their current dividend growth streak is at 17 consecutive years, which is phenomenal, and I believe this will continue to grow over the long term, and I would not be surprised that over the next 3 decades, if Microsoft will become a dividend king. So of course, that's really long into the future, but that's personally how bullish I am on this company. And of course, if we take a look now at the income statement, every single year, total revenue continues to grow. Without slowing down, their total top line has expanded to around $160 billion, continuing to grow every single year. And if we take a look at the bottom line, this is a very profitable company with $56 billion of total net income in the trailing 12 months. So very high profit margins, sitting around 30+% on the net income level, and that's phenomenal for such a company at such a large scale. And then of course, why I am a true bull on Microsoft is the strength of their balance sheet, which I believe to be one of the best in the world. And if we can see that right now, they have $125 billion of cash sitting on the balance sheet. Just in cash, $125 billion is absolutely incredible. So much capital to do research and development, acquisitions, fund growth, and they can do anything they want with such a large cash position. And then of course, if we take a look at their total current assets of $165 billion versus their short-term debt of only $72 billion, they have a current ratio above 1 and very sustainable. And overall, the company's total liabilities sit at $174 billion. And for a company with over $300 billion of assets, they are in a very healthy financial position. And of course, if we take a look, the $165 billion of short-term assets, which are assets available to them within the next 12 months, can pretty much pay off all of the company's total debt on the entire balance sheet, which is absolutely phenomenal. and the total equity currently comes in at $134 billion, which continues to grow every single year as well. So Microsoft, one of the strongest companies in the world, just in terms of financial numbers as well, and I think over the long term, they will continue to grow. And of course, if we take a look at some analyst expectations and some analyst, price charts and different buy ratings, we can see that at this current level, there is 17 strong buys, 20 buys, 2 holds, and no one is selling out of this company. Pretty much everyone believes Microsoft is a buy or a strong buy at this current point in time, and that's absolutely phenomenal to see. And currently, over the past 6 quarters, they have beaten analyst expectations every single time by pretty much mid to high double digits. And going forward, total revenue is projected to grow every single year and hit over 186 billion by year end 2022. And if we take a look going forward, analysts are forecasting annual expansion of around 16 to 17%. And at this current level, the stock is considered a strong buy, coming in at a 1.6, and the current share price of $245 is well below the 12-month expectation of $290 per share, implying at least 20% upside from their current level. So right now, the company's in a fantastic position. Great financials, growing operations, expansion into different markets. The company's one of the strongest names in the world, and I just want to see them pull back even further so I can load up, buy more shares of this market-leading company for my personal portfolio and own for the long term. So that was a quick overview of Microsoft, a company definitely worth taking a look at right now. Strongest brand on the market. Do some research. Let me know down in the comments what you think of this company. If you own some shares, if you don't, let me know why you don't. Just give me your overall opinion on the company. I love to have discussions. So please hit that like button, subscribe for the daily videos, and I will see you in tomorrow's episode.